Good afternoon, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hope everybody had a very beautiful day. And in today's markets, guys, well, it was a heck of a wild ride, wasn't it? What started off as a fairly bullish morning after NVIDIA's earnings yesterday, carrying up the rest of the market, quickly turned sour in the early hours of the afternoon. Pretty much everything selling off in quite a technical fashion. No real macro news to warrant the sell-off, really just a little bit of technical sell-off conditions here. Quite low volume, potentially heading into the long weekend. We also had a few of our shorter term time frames, such as the 4-hour on the SPY or on the QQQ, 4-hour on the SPY as well. We're in slightly overbought conditions, guys. So the conditions were ripe here. Even on the daily, we were a little bit overbought here on both of the major indexes. The conditions were ripe for a little bit of a technical sell-off, and that's what we were kind of looking out for on the channel. However, we are still relatively healthy, all things considered, when we zoom out and look at the larger time frames. So in today's video, guys, we're going to go over a few key things together. Number one, I do have an earnings call prepared for you guys. We're going to be taking a look at INTUIT, one of these most solid companies in the entire market, and see how they reported earnings after the close. Then we're going to take a look into technical analysis on our major market indexes and big tech names and see, in spite of today's sell-off, is everything still looking healthy, or are we potentially heading into a little bit of weekly corrections? And lastly, guys, we're going to take a look at my portfolio and see the trades that I've made today. So without further ado, guys, let's get right into today's video. So SPY down a healthy 0.73% and QQQ down about 0.45%. But if we were to take these moves top to bottom, guys, the top to bottom moves were very, very violent, right? Top to bottom on the SPY, about 1.34%, very big day. And on the QQQs, top to bottom, almost 1.7% to the maximum drawdown. So heck of a sell-off event. Now, into our heat map, guys, once again, you can see the market was just not having it today. Only really NVIDIA, General Electric, and a few names here and there were green. Once again, 15 names out of 500 were green on the markets. Everything else really taking a heck of a pullback. On the one-day relative, you can see that even better. Healthcare etching out a little bit of gains. Technology as well, mostly aided by NVIDIA. However, the rest of the semiconductors were doing terrible on the day, and everything else bright red, which leaves us a very mixed week nonetheless here, guys, right? Only 3 sectors in the green, the rest of them in the red, not looking the best. So we'll see how tomorrow's trading concludes, but today was definitely a day of setback, right? We pretty much undid a lot of the work that we had done throughout the week, and the market's just closing and diving a bit lower. So before we get into more technical analysis, guys, let's take a brief look at INTUIT earnings, and it was a fairly good one. However, the stock is now down 7.25% in the after hours, unfortunately, retesting levels of early January. So what exactly happened on INTUIT to warrant such a big sell-off for such a solid company? Well, let's take a look at how they did on the quarter here, guys. They absolutely crushed it. Not only did they crush it for this quarter, they raised their full year guidance, but it wasn't enough because they trimmed their guidance for the next quarter. So they trimmed their guidance for the next quarter, but reiterated that their full year would be good and even increased guidance for the full year. So Wall Street just being very, very, very precarious with all of these companies, guys. No matter what company reports good earnings, if you're not consistently beating guidance across the board, quarter over quarter, next quarter, and the full year, Wall Street is just having, a little bit of a hissy fit here, selling down very beautiful companies quite aggressively. And we've seen that time and time again happen over the course of this most recent quarterly earnings over the past month and a half, pretty much, and INTUIT not being spared nonetheless. So let's take a look at this company here, guys. You obviously know that they are a tax software company for the most part. They are known as the industry leader. They have very decent net margins as well. Usually their net margins on an annual basis is anywhere between 16 to 20%. So very, very, very solid. High amounts of free cash flow, low amounts of debt, and the revenue and growth are pretty much both in double-digit territory. Very, very solid company, guys. Nothing wrong with this company whatsoever. Take a look at your EPS expansion on an annual basis. Very good. The reason you see quarterly bumps right here is because this is their tax quarter, right? This is when they make the most amount of money. But for the most part, they're able to streamline those gains through the full year in EPS and also through the full years in terms of revenue as well. Such a solid company. So when I see it sell down about 7.25%, well, I had to take a little bit of a nibble down here, guys, and we'll take a look at that at the end of the video. when I go over the portfolio. So let's take a look at some of the highlights from the quarter, guys, right? So Intuit reports strong third quarter results and raises full year guidance. Very, very healthy report, right? We went over these numbers again. Let's just view them. Healthy beat on EPS, 5%. Healthy beat on revenue by about 1.3%. Just wasn't good enough for Wall Street for the next quarter guidance. That is what they're saying right here. The company expects adjusted EPS of 180 to 185 for the quarter ending. This is the next quarter. That was lower than the consensus of 1.92. That is the reason for your 7% drop, a slight 6% decline in EPS guidance for only one quarter. But wait until I show you guys the full year. It's actually very, very bullish. So here's what the CEO had to say about these things. The era of AI is one of the most significant technology shifts in our lifetime, and our strategy to be the global AI-driven expert platform is delivering significant benefits to our customers and strong results across the company. I'm proud of our innovation and performance, and because of our momentum, we are raising Intuit's revenue, operating income, and earnings per share guidance for the entire fiscal year. This is extremely bullish here, guys. And when we take a look at some of their growth metrics, you'll see everything is so good for the company, right? Reported total cash and cash equivalents of about $4.7 billion and only $6 billion in debt. So the financial health of the company, their balance sheet is very, very good. They're also still repurchasing shares, 584 million of shares repurchased during the quarter, and still $2.1 billion of shares to be repurchased on their outstanding authorization. So looking very, very good. Here is your guidance. They raised total guidance for full year 2024. Raise of the revenue guidance by 13% up from 11 to 12. So there's your raise on full year revenue guidance. Now, operating income, right? So revenue minus cost of doing business. Operating income, look, 21 to 22%. That's their new guidance versus what the expectation was of 15 to 18. That's a huge beat on guidance here, guys. And now we have the EPS. So growth of approximately 28 to 29% on a yearly basis, up from the previous guidance of 11 to 15. This is literally a 2x bump on EPS guidance. Absolutely fantastic. Now, the company also updated full year fiscal 2024 segment revenue guidance. All of their lines of businesses are significantly growing, and they raised guidance on each of them, right? Small business and self-employed, 18% instead of 16 to 17. Consumer growth, 7 to 8%, which is the high end of the previous range. The Pro Tax group, right? 6 to 7%, up from 3 to 4% prior guidance. And Credit Karma, their most known product, right? Growth of approximately 2%, updated from a potential decline of 3%. That is absolutely ridiculous improvements in guidance, guys. Very, very, very healthy company as a whole. And in the quarter, since it was one of their tax quarters here, guys, you can see their net income right down here. That is about 35% net income margins on the quarter. Very, very good quarter for Intuit nonetheless. Let's take a look at some of their business segments here, guys, right? So here's their business segments. Small business and self-employed, 18% year-over-year change. Consumer, 9% year-over-year. Pro Tax, 3%, very good. Credit Karma, 8% year over year. And it's pretty much the same when they go through their full year guidance here. I'll blow it up a little bit, right? For fiscal year 24. Look at these amazing number, guys. These numbers are right in line with what they've been doing in prior quarters. As a matter of fact, they're even better than some of them, right? 6 to 7% for here. This was their Pro Tax division right here. And just very, very healthy numbers across the board here, guys. So really, really no reason to panic on this stock whatsoever. Look at these operating margins for all these lines of business, right? Look at these operating margins. 61% for small business, 75% for consumer, Pro Tax, 89%, Credit Karma, 25%. This is pretty much in line with their previous numbers, even a lot better than a few quarters prior. So very, very healthy growth of the company, guys. Nothing bad to say about Intuit. They're really doing a great job of firing on full cylinders right now. It was an amazing quarter for them. Such an overreaction by Wall Street right here. So where do we stand in terms of our technicals and evaluation of the stock price right now? Well, the stock's currently sitting at about 614. That is pretty much this level right here. Takes us back to our prior level of support right now. What are we trying to do here, guys? Well, we're in a gorgeous monthly uptrend right now, looking to set the monthly higher lows for that trend continuation. The weekly also, even though we're back down here, we were trying to get this weekly expansion going. Now we're going to have to try and find a double bottom around this range, but I do really like this range for price support, guys. I don't believe Intuit will have a negative year. And as it currently stands, guys, right, this is the early January candle. We're pretty much on par. We're pretty much flat for the year on Intuit. So it's underperforming the S&P, underperforming the QQQs, and usually it doesn't. Usually it outperforms. So I do believe this is a juicy trade opportunity opportunity for the company right now. That's why I took it myself. Now, in terms of the valuation, guys, Intuit always runs rich. Why does it run rich? Because it is such a solid company. You can see a lot of solid companies, guys, they run rich. Why? Because they're predictable and because they're consistent in terms of their revenue and EPS. That's why they get the boost in terms of their premium that their shares trade at, right? You can think of this, you see this all the time with companies like Costco, MasterCard, Visa, and the list pretty much goes on. All the solid companies, guys, usually always do trade between 40 to 50 PE. That is just what investors are willing to pay for a company that is consistently predictable and profitable as well. So let's take a look at the valuation here, right? I have a few of the metrics lined up. So their 2024 PE at $614, which is their price right now, is about a 36.5. You might think that's a little bit high, guys, but Intuit, look at the price history for Intuit, at least over the last, let's call it 3-4 years, right? It's always between high 40s and about 60, which is standing right about now. That's their trailing PE. So when we look at the forward PE and see it's only a 36, in 1 year's time, we can extrapolate that the market will probably give it at least a 50 PE ratio. So moving forward, that means that if we do a little bit of math here, right, between 36.5 to 50 PE, what would the share price be? So for 36.5, if we know that their trailing PE ratios is usually, let's give it an average about 50, we know that on a forward basis, it is slightly undervalued. By how much? By about 1.5. So if we were to take the share price right now and times it by about 1.5, it can even go a little bit cheaper if you want, guys. You can do it with 1.4. Share price should be trading in 1 year's time in the $800 range. That would not be very far-fetched for Intuit at all. If we take their PEG ratio is always above 2, guys. I've rarely seen Intuit trade below a 2 PEG ratio right here. It's just because the company trades at a premium and has consistently traded at a premium for at least the last 5, 6, 7 years at this point. So no surprise there. Their PEG ratio is about 2.43. Not that bad. I do believe that there is a lot of juice left in this stock to the upside. And analysts, in terms of your analyst expectations here, guys, analysts tend to agree with the share price right now at around 614. The upside can be between 700 all the way as high as 775, but I do think that's a little bit conservative for Intuit. I would not be surprised if this stock is trading in the $800 range at this same period of time next year. So a very little decent buying opportunity. This stock is obviously not a volatile stock like NVIDIA, right? Don't expect leaps and bounds, but what we can expect is that consistent grind higher like Intuit always does. So looking very good on this stock. I do still believe heavy overreaction by Wall Street. So that's pretty much everything we had in terms of our earnings here today, guys. Now let's jump right into our technical analysis, and not much has changed, even though we got a big little red day here today. So we were in the context of this daily uptrend. That's where we were watching. Daily higher lows were set, and we were looking for the continuation of the daily uptrend. But what happened, guys? We set the lower low without really breaking the higher highs, so now the bears have a chance at the daily downtrend follow through. Good thing we have a lot of support below us. That's why I've moved up this green box, 523 down to about 514, this 10-point range. Great area of fallback here, guys. We're literally just looking for the weekly higher low for further trend continuation. Your 12 EMA is right down here at the bottom end of this range, and I do believe that is maybe where the bears get stopped out before we have another leg of bullishness here. Little bit of a technical sell-off here, guys. Nothing more, nothing less than that. The market's not falling apart. We just broke above all-time highs. Big gap up open. A lot of euphoria, a lot of greed after NVIDIA earnings, and now we are tapering back, coming back down into more normal conditions from our overbought conditions. Moving into QQQ. Same analysis on QQQ. However, QQQ has created a bit more space than SPY. So daily uptrend is in motion still, and we're still just looking for that daily higher low, anything above 449. Let's call it about 450 flat, right? Just going to be looking for that daily higher low for further trend continuation. So SPY broke the lower lows to the downside daily downtrend. QQQ did not. Largely, obviously, responsible for that was the outperformance of NVIDIA on the day today. So watch these lows, guys. If we flush these lows, could set up the bears for a little bit of a daily downtrend, but you guys see this massive support area below us, right? 447 down to about 435, 10, 12-point range again. Should be a great location to potentially set up for the weekly higher lows for that weekly trend continuation. Target your 12 EMA right down here, 439 could be a nice little tap and go for the bulls. I do think it's going to be very hard for the bears to blast through this area of support that the bulls have now broken above into. So looking very, very good. And we do have short-term moving averages down there as support too. So all in all, not looking too bad. Just 1 day of sell-off. If we continue selling off here, guys, into the next week, I obviously been saying for the last 5 days or so, just expecting a weekly higher low. So a little bit of consolidation, guys, never hurt anyone. If anything, it's just going to be another opportunity here to shop for some deals. Now, moving into financials. Financials really having a nasty day today, 1.38% to the downside, and came back and really touched the line that we were looking at here, right, guys? So it was a daily uptrend, and now, unfortunately, daily downtrend has commenced. When we know we're in a daily downtrend, you zoom out to the higher time frame, and we're just looking for that weekly higher low for further trend continuation. If for whatever reason we get through this line of support right now, which is labeled at about 41.20, we could potentially come down and tap this 12 EMA on the weekly, 40.95. I think that is where the bulls are going to put a stop to this before making another leg to the upside. So all in all, no big red flags just yet here, guys, but financials, definitely the bulls need to get their butts back in gear if they want to save this. If not, if we pull too low, guys, may end up in somewhat of a tightening range close to the all-time highs here. So moving on to, and one of the major drops here today was Schwab. I have no idea why Schwab has been down this much over the past 2 days, guys. 10% to the downside, no news whatsoever. So unfortunately, guys, just, kind of an unfortunate situation for some financial stocks. But if we do hit oversold conditions on a lot of them, could be a very juicy buying opportunity. Now, moving into our next index, we're going to take a look at healthcare. So healthcare also not having a great day, guys, 1% to the downside. Healthcare as well was in a nice daily uptrend right here. And we were trying to set the daily higher low, go for the uptrend. And unfortunately, we lost it now. So breaking the lows, if for whatever reason we set the lower high and lower low, it'll be daily downtrend confirmed. The bears do not have full control yet. We still have one line of defense, right? 144.75. We're right there right now. The 12 EMA is there as well. If ever we start losing more ground, continuation of the daily downtrend, you guys know the drill. Just going to be looking for, right? We had first the downtrend, the bulls putting in a nice engulfing move, right? Not quite fully engulfing on a technical term, but at least about a 90% retracement. That's very good to the upside. So the bulls have created a lot of space to eventually set that weekly higher low and regain the weekly uptrend sometime probably later in the month of June. So all in all, not looking that bad, just taking a little bit off the table. We're in a little bit of overbought conditions. So we will see how long this daily downtrend continues, and we'll see whether or not we can get a nice little juicy buying opportunity on some of my favorite healthcare names down there. One of the ones that I'm watching is AbbVie. AbbVie is coming down into my juicy sweet spot right here, roughly 158 down to 150. Going to keep an eye on this one. And another one I've been looking at here, guys, is Johnson & Johnson. Johnson & Johnson's been moving kind of sideways. And if we can come down into this lower 146, 145 level, could be a little opportunity here for maybe a short put swing trade. Usually Johnson & Johnson doesn't much stay below its longer term moving averages. And you can see now that we're kind of extended in an extended fashion below them. So I'm looking at those two companies in healthcare for swing trades specifically. Now moving into SMH. So semiconductors, guys, pulling a little bit back from the highs. That is completely normal. NVIDIA was pulling most of the weight in semiconductors today, but the rest of them really not having a great day at all. So daily uptrend is still confirmed right now. Just looking for a higher low, anything above 229. Just looking for that daily higher low for further trend continuation, right? What we did here today, guys, is did a great job of cooling off the lower time frames. A little bit overbought on the 4 hour, and even the 1 hour was heavily overbought leading into today's trading. So a little bit of healthy consolidation as we've been talking about prior, right? There's a nice little range. We can even move this support box up, right? Because now we are significantly higher. This whole area right here is going to be your next area of support for the bulls. So I really don't believe the bears are going to be able to get through this easily. If anything, if we do start a little bit of an extended pullback, let's say NVIDIA gives back a little bit of its earnings gains, could just be looking for the weekly higher low for further trend continuation. The bottom end of the support range, guys, 220. The 12 EMA is sitting right there. So could be looking at something just like this, provided the markets continue being bullish, which they are, provided the economic data continues being bullish, which it is right now. I really see no major red flag concerns for the markets. Moving into IWM. IWM Russell having a huge day of sell-off here, guys, right? And it was predicated with the bears taking back the daily downtrend. So daily downtrend back in the bears' favor, currently tapping the 50 EMA on the daily. But what is the level we're looking out here for, guys? It's going to be this level right here, 201 down to about 195. They are trying to set up for a weekly higher low for the weekly trend conversion. So far, we have not got it, but if I had to bet on one area, guys, huge area of support back here, resistance, 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 and a big chop zone right here. I do believe this is going to be the likely area of support for the bulls. Something like this could manifest. If the bears pull back too much, though, may end up with more of a tightening range, guys. Growth stocks are going to have a big problem rallying until we really get some consistent inflation reads to the downside, and until we know for sure that the Federal Reserve is going to decrease rates in September. Growth stocks really don't have the runway yet to really start that massive momentum to the upside, right? Investors still a little bit cautious, still a little bit timid for growth stocks or the risk on trade as a whole right now. Now, lastly, moving into the Dow Jones really not having a great day at all, guys. Every single name on the Dow Jones today was red, all 30 of them. So very red day for the Dow Jones, not too good. However, the Dow Jones does have a lot of space on the higher time frame. So what are we looking at for the Dow Jones specifically? Well, we were looking for this daily uptrend, right? Daily higher low. We're looking for the continuation, and now we lost the higher lows right now. So not a daily downtrend yet. That would be lower high into lower low. However, if that does manifest, let's say we get a bounce tomorrow and Tuesday and then roll over, daily downtrend is commenced at that point, and then we'll just be looking for a weekly higher low for potential further trend continuation. The red flags come if we take back too much of this move. How much of the move have we taken back so far, guys, in one day of trading? Only 38.2%. Not that bad. I get a little bit nervous if we come all the way down here into the 618 level, because that just sets up the bulls for even more work to get done, guys. Usually when you pull back 61% of the move, the best you can hope to get is a tightening range before the further blast off. Or the worst case scenario is if they take two back, lower high into lower low. I don't think that's going to be the case, guys, because the markets are overall bullish. I'd be very surprised if we were to lose the weekly uptrends after having recaptured them, but just some food for thought, just to analyze, right, where we stand. And that 618 level is right at this level of support right here, 38,600 down to about 38, 350-ish, let's call it our previous line of support. That is where the bulls absolutely have to play defense. So we'll see what happens tomorrow, whether or not today's selling was a little bit overdone. I do think it was a little bit overdone today, a little bit of a healthy correction to say the least. Now, moving into our big tech names, guys, shall we? So moving into Apple with a big day of consolidation, and we were seeing this coming, right, guys? Apple was approaching overbought conditions, had a great little rally up over the past 2 weeks. The consolidation was inevitable. Why? Because we need to set that weekly higher low. So on the daily, let's take this one time frame at a time, right? We're in a gorgeous daily uptrend right now after earnings, and the higher low was right here, 189.25. We have now lost it, coming down, touching our daily 12 EMA. If for whatever reason we set the lower high into lower low, and then we get the daily downtrend, well, Apple will just be in for a very healthy weekly pullback after 4 weeks of rally in a row after their earnings. Could be a decent opportunity to get a weekly higher low for the weekly trend change. So this location right here, lower 180s down to about 178, still a super juicy pocket to trade Apple in my opinion. So I am looking for this to come down, and if it does come down and pick me up, I'll be very happy to throw a decent amount of capital at Apple down here, just because it's such a solid support zone, and we have all of the weekly moving averages right there as well. Something like a breakout, retest, and recapture of the weekly uptrend is what I'm looking out for on Apple. Now, moving up to AMD. AMD, guys, got absolutely destroyed today. Take a look from the top of the morning here, 173 down to about 158 at the lows. That was an 8.5% drop on AMD. No news at all, right? You would have expected this one maybe to be a little bit of a bullish carry trade from the NVIDIA earnings, but just not getting any love whatsoever. There was a few little headlines coming out of China, right? How China was once again boycotting a few lines of business from AMD and Intel and really favoring their own, in-house chips that are made in China. So that did weigh on the stock a little bit here, guys. But in terms of the sell-off on AMD, a little bit blown out of proportion, in my opinion. They are the direct competitor to NVIDIA. They're pretty much in second place. There's no one close. Intel or Samsung aren't even close to what AMD is trying to do right now. So a little bit of an overdone sell-off, but that's just the way the market is sometimes. So daily uptrend, we were looking for this daily uptrend continuation, and we lost it. We lost the daily higher lows right here. So now it is not a daily downtrend yet. We are just going to be looking for potentially At this point, guys, maybe lower high into lower low. That would be your worst case scenario. The best case scenario is if the bulls can save this right away tomorrow and put in a little bit of a green candle bounce, right? That being said, we have lost the daily uptrend, so the bulls will need to reset this down the line some point. If we were to plunge even further, set the daily downtrend, well, unfortunately, guys, that would be just revisiting maybe these lower levels on AMD, 146 all the way down to about 140. It is still in the context, right, of this weekly trend recapture. The bulls have put in a nice move. Now it's up to them to set the weekly higher low and get that weekly trend change going. So AMD still a very juicy trade opportunity, in my opinion, 150 down to 140. If we can get back down there, I will be going a lot heavier on AMD myself. The bulls not out of the, they're not out of the woods just yet, but I also wouldn't count them out of the trade just yet too. Still protecting decent levels, still trying to protect these 12 EMAs as these moving averages as well. And we're still battling it out, right? This lower area of support, we're still kind of trapped within it right now. So I would like to see the bulls hold on to these levels at least for tomorrow's trading session. And then we will reevaluate how the trade stands for next week too. Moving on to Amazon now. Amazon also down for the day, no surprise there. Daily downtrend on Amazon simply continues, which means that your weekly consolidation on Amazon simply continues too. We are at the 12 weekly EMA, this line that the bulls have held so beautifully since the rally in November. Well, we are there touching it now. So it's obviously a great and gorgeous weekly uptrend right now, right? Nice weekly uptrend. So what we're trying to do is set the weekly higher low and just continue this uptrend. If for whatever which reason, guys, we dip a little bit lower, you guys can see the size of this green box right here, 177 down to about 167. This 10-point range is the range that I do believe the bulls will do everything in their power to protect. I really don't believe we're going to get much lower than that. So if we can revisit under 180s, I will be looking to trade Amazon fairly aggressive and add to the positions that I already have. All in all though, guys, not looking too bad at all. The bulls, you can see, guys, in the last 2 weeks of daily downtrend, Amazon really hasn't given back that much, right? Only given back about 5%. I know 5% sounds like a big number. But when you zoom out, guys, the monthly, we're still above the all-time highs here. And on the weekly, we're still looking quite bullish too. I'll just remind you guys that to come back down into this area, all of this is going to be support. That's why I think that the bulls stand a very good chance at protecting the zone. Now, moving on to Google right now. So Google also not being spared today, 1.65% to the downside. And Google, after about 6, 7, 8 days of green in a row, finally starting to pull back a little bit, tapping the 12 EMA right now, still in a very healthy daily uptrend, looking for that daily higher low for the eventual trend continuation. How do you know that all these moves of downside are finished, guys? Just look for the hourly trend recapture. When you get the hourly trend recapture, we are probably going to have another daily leg higher. So all in all, Google not looking too bad. If for whatever which reason, guys, we lose this and set the daily downtrend, you guys know the drill, zoom out. Healthy weekly uptrend on Google right now. Just looking to set up for the weekly higher low, anything above 165, weekly higher low for further trend continuation. I would be more interested in Google. If we can pull back here, maybe to the 170s, I may be looking to write some contracts here, 167, 166, targeting these lows. Now moving into Meta. Meta also with a red day, pretty much everything red except for NVIDIA, so no surprise there. Meta desperately trying to save the double bottoms right now, right? So Meta had a nice daily uptrend going after their earnings, and now they're struggling, right? If we were to break these lows tomorrow, 459.75, it would be a daily downtrend confirmed, and you would have a little bit of weekly consolidation underway. The bulls, once again, trying to recapture the weekly uptrend, trying to reset the daily higher low and the weekly higher low and move on higher. So if ever we start pulling back aggressively here on Meta tomorrow, my level, I've told you guys so far, right, 450 down to about 440. If we can enter this zone right here, I will be playing Meta fairly aggressively, just looking for that weekly higher low for the eventual trend continuation. Meta still in monthly consolidation mode right now too, just looking for that trend continuation to manifest over the course of the summer and into the fall. So now could be a great trade opportunity if we do revisit these lower levels for Meta. All in all, not looking too bad. And to the upside, guys, well, it is pretty clear at this point. We really need a break of this 481 level. We need to mount above 41. If we mount above 41, your daily uptrend is resumed and we will be recapturing a few things. Number one, this area of resistance, huge to get above that. And all of our moving averages, which are currently below right now, we would get above them. So something like this breakout, retest this trade could be a juicy location for some trade continuation as well. Now, moving into Microsoft, give me a quick second. All right, so moving into Microsoft, 0.82% to the downside here, guys. Microsoft as well, right? Had a gorgeous rally over the past couple of weeks. So now just looking for that daily higher low, anything pretty much above 418, just looking for the daily higher low for further trend continuation. Now there's a few key levels of support below us. We're currently coming into them right now. This whole chop zone of the previous all-time highs, and then obviously below us, all our moving averages, and the top end of your range of consolidation, that's at 414. So pretty much what I'm trying to say here, guys, is everything from 425 down to 415, it is all support, whether you're looking at this or this, this clear line right here, and the moving averages, a lot of support for the bulls down here. So if ever we start pulling back aggressively into maybe a daily downtrend, guys, just going to be looking for a weekly higher low for the trend continuation on Microsoft. Really, if we pull back down, guys, 415, 410 could be a nice opportunity to pick up some Microsoft for the eventual trend continuation. No red flags so far, guys, on the higher time frames. Monthly's looking gorgeous. Weekly is still looking very, very decent despite not being able to really crack above our all-time highs. And the daily is also not looking too bad at all. Still in a very healthy daily uptrend. So any revisit of these lower levels, guys, 415, 410 could be our last entry for Microsoft for the remainder of the gains to be had throughout the year. Microsoft, how much is Microsoft up year to date so far? About 14.21%. So slightly outperforming QQQs and SPY, but not tremendous outperformance, right? So if they come down here a little bit more, if they can give me a little bit extra, right, a nice little 3-4% extra discount, that would put them at about 10% year to date, and I would be willing to play Microsoft at that point. Now, moving on to Netflix here, guys. So Netflix also pulling back on the day, right? No secret there, 0.75%. Netflix also healthy daily uptrend, looking for that daily higher low, anything above this level right here, 608, looking for the daily higher low for the trend continuation. We're bouncing off prior 52-week highs right now, right? So bulls really using this area of support. And if we come down a little bit lower here, we also have the 12 EMA at about 623. This whole area, guys, is an entire area of support. As a matter of fact, what I can do right now, since we're well above this zone right here. Actually, let me just do a new one here, guys. It's going to be much easier at this point. If just put a zone, right? Because support is never really one line or the other. It is really a range. So you can see this whole range is going to be very tough for the bears to get through. That's why I do really expect the bulls to be able to put a stop here and go in for the daily trend change, the daily continuation of the uptrend. If for whatever reason, guys, we pull back and set a daily downtrend and start retesting some of these lower levels, well, you guys know we're just looking for that weekly higher low for further trend continuation. So just keep an eye on that for Netflix. Everything is still very good. Monthly, gorgeous uptrend. Weekly, full engulfing move, looking for the trend reset eventually. And the daily, still in an uptrend. So no red flags, guys. One day of downside is not going to break the market. Moving into NVIDIA now. NVIDIA performing quite decently after their earnings, right? $1,038 right now, 9.32%. We did get as high as about $1,060, which was a very good day of trading. So where do we stand on NVIDIA? Well, I mean, clearly, guys, beautiful daily uptrend right now. And we may get a chance at taking the breakout retest trade. If ever the markets continue to being a little bit soft and go for those weekly higher lows, right? And we get some extended selling to the downside, this area right here, guys, 965, prior all-time high resistance a couple times, could be a juicy area, breakout, retest. We may not get fully there. Maybe we only get to about 990, 980, something like that. Could be a juicy location for some trend continuation on NVIDIA. No red flags whatsoever. The weekly is obviously looking very good. We'll see how we close tomorrow, but no red flags at all. So that is the trade location that I'm looking out for on NVIDIA. And obviously, guys, areas of resistance, just go with the round numbers, 1100 and then 1200. Nothing bad to say about the company. They absolutely killed it and continuously being rewarded for it. Moving into Tesla now. Tesla pretty much giving away all the gains that they had on Tuesday. So unfortunately, Tesla, guys, not looking that strong at all, right? We had the daily uptrend, and now the bulls are losing almost everything. 172.17 is the clutch zone. If we lose that, unfortunately, guys, we lose the daily uptrend, and it sets up the bears to set up for the daily downtrend. And if we get the daily downtrend here, guys, keep a close watch on this last line of defense, 161. It's very unfortunate because Tesla just a few weeks ago was almost at 200. So if we were to revisit these 160 levels, that would be a heck of a drop here, guys. And we need to protect these. Why do we need to protect these so much? Excuse me. Need to set the weekly higher lows and get the weekly trend change going. And if we lose these lows right here, guys, the bulls will lose too much ground right now and set up for the weekly downtrend, right? Arguably, if the week closes like this and we flush next week 167.74, it would be a renewed weekly downtrend, which would not be the best case scenario for what the bulls are looking for. So this whole area, guys, 168 to 161 is so important for the bulls to protect over the next week of trading. If not, Tesla will just follow its likely pattern of just continuation of this monthly downtrend. I'll remind you, even though there was a lot of bullishness after earnings, a lot of that bullishness was about what Tesla was going to do next year in 2025, not necessarily how they were going to fix the current demand problems that they're facing with high interest rates in 2024. So we'll continue keeping a watch on this one here, guys, but definitely still one of the ones that I'm staying a little bit away from right now. I still just don't think that, any trades that require financing, right? Think of autos, think of the solar trades as well. Anything that requires high levels of financing, furniture, right? Renovation products like renovation projects like Home Depot and Lowe's. You see it, guys, right? The demand just is not there because interest rates are so high. And now moving into Palantir. Palantir also suffering on the day here, down about 2.13%. Palantir playing a dangerous game with the lows right now. 20.4 is the area that the bulls absolutely cannot lose because they're trying desperately to get a daily uptrend going. If we get a break of 2207, if all this short-term bearishness goes away and Palantir resumes a daily uptrend, we would need a break of 2215, and then we would be moving into our next resistance target of 23. But break these lows right here. Unfortunately, the bears have the daily downtrend continuation, and unfortunately as well, guys, will reset us into a new weekly downtrend. At that point, we'll be looking to the bottom end of this range as a last line of defense right here. That is about the $19, is the 50 EMA on the weekly. And we are still hunting desperately for our monthly higher lows. The 12 monthly EMA is also down here at 19. So big level at 19, guys. This whole support zone resistance should still be acting as support here, guys. Palantir just not having the best time after its earnings. But then again, at least we're not seeing, capitulation on Palantir stock. We do still have a decent amount of support around here, which is why I will continue to play this stock as long as it remains in the $20 to $19 range. I still think it's a healthy location to be playing Palantir. Now moving into PayPal. PayPal not having a good day at all, 0.98% to the downside, guys, and we're losing a critical level right now, 61.68. We have now just flushed it. So daily downtrend on PayPal has been renewed at this point, playing a dangerous game right now, guys. The last line of defense is right now, because if we start coming into these lower levels here, guys, we will undo a lot of the weekly work that we've put in so far since the beginning of the year, right? This is why this level is so important. I know that there's a lot of support down here, guys, but you have to understand if we close below these levels as we are right now, the bears regain control of the weekly trend. And that has not been the case, guys. So far, it's just been a tightening range and we were looking for the potential breakout. But if we start breaking down into weekly downtrend, then the next stop is going to be down here. And unfortunately, on the monthly, guys, on the monthly, we've also, if we come down here dangerously close to losing this monthly breakout pattern, right? If we come down too low, could just be continuously trapped in a monthly tightening range. So not looking the best for PayPal right now. But as a matter of fact, a lot of fintech companies have just been suffering this week. PayPal has not been immune. Square has also not been immune as well. And even SoFi has not been immune. And I found the news that was plaguing them, guys. I found it. Finally found the news that was plaguing the stock here, right? Let me just see if I can find it real quick. Don't want to spend too much time on this. If I can't find the article, I'll just tell you guys. Here we go. Affirm PayPal block shares drop following new buy now, pay later regulations. So essentially, guys, they're deeming that the buy now, pay later services need to have the same disclaimers and protections as credit card providers, even though they're not. Now, they reached out to Affirm and Affirm said, well, that's not a problem with us, guys. We already have a lot of these regulations in place for our customers. And I assume that PayPal and Square have the same thing. It's not as if this news is blindsiding them, right? Which is exactly what one of the analysts, it might not be in this article, but a lot of people were saying, it's a little bit overdone in terms of the news because this is not that bad. The fact that there's new regulations coming in for the consumer and that these companies need to give more disclaimers and more protection in the event that they can't pay, right? Well, that's not necessarily a bad thing. It's a temporary negative news item that's interpreted in a negative fashion by the markets. But all in all, it's not that bad. These companies are set up to be able to deal with this fairly quickly. So sell-offs on a lot of these fintech plays have been a bit overdone in my humble opinion. So that's pretty much everything we had for our stock market recap today. Now let's take a brief look into my trading that happened over the course of today's session. All right, guys, so taking a look at today's trades, well, I just wanted to start off by saying I will do a full recap of the P&L on tomorrow's video. Just going to wait for a few more positions to come through. But all in all, guys, today was a fairly mixed day of trading for me. A couple of trades went really, really well, but another couple of trades, guys, I slightly mismanaged a little bit, and I'll go into the details right now. So in terms of our NVIDIA trades, well, we had a 740 put. This was a 2 standard deviation put that we just took for the heck of it, right? We paid about $1.05 for them yesterday. We closed these at a 90% loss today. So we lost about pretty much, $90, $95 on this one. But it was just in the event that NVIDIA really crashed through the floor after earnings. I wanted to have a little bit of protection as the rest of my positions were bullish leaning. So we took a little bit of a loss there. However, the bull put credit spread that we had here, the 840s and the 835s, that actually went really, really good, guys. We got about $1.05 for them each. So we had 2 contracts, $1.05 each, and we were able to close them for about 16 cents this morning, right? Just think of it as a traditional credit play, right? So we wrote an amount of premium and then we bought back the remaining premium. So it was about an 85% gain. Very, very happy about that. Made about $200 on this version of the on these bull put credit spreads right there. So that was a very decent trade. Now, in terms of our call debit spread, right? You guys remember me opening this one yesterday. It doesn't list it perfectly here, but all in all, you guys just need to understand that what happened today, we bought them. These call debit spreads, we bought them for $1.50. And in terms of spreads, guys, they only usually hit their maximum profit potential at expiry. And I was saying yesterday, if we can at least capture 50% of the gains and still with that much time left on the table, right? These are June 14th, 3 weeks away. You may as well just close the trade and move on to something else. It serves no purpose to wait 3 weeks for the remainder of the premium that we got pretty much the same in one day, right? It just doesn't make sense. That's why I had to close this trade. So we bought them for $1.50 yesterday and we closed them for $2.90 today. So very, very nice gain, almost a 2x on that play, right? So bought in for $150 each, closed them for $290 each, and we had 2 contracts. So very healthy day of profit on NVIDIA. We also sold our NVIDIA shares that we had. We bought the NVIDIA shares after the close yesterday. Where's that trade right there? Let me see if I can put it up. 5 shares here for about $965. And when the markets were unraveling, guys, I did not sell the top at all. I actually sold into the late afternoon at $1,027. Just didn't want to give any profit. And the reason I did that is because we had INTUIT earnings coming up. So I sold 2 positions. I also sold the MELIs. MELIs, Meli, Mercado Libre. We picked them up at about $1,525 each share. We sold 2 of them, which gave us a nice little gain. We sold them at $1,700. So a nice little gain, guys. Let's call it about $360, $380, something like that, right? So fairly decent trade. Just was a swing trade. And we just took that capital off. And what did we do? Because I was waiting for INTUIT earnings. And if ever they missed, I wanted to go into the trade. So that's what we did. We bought 10 shares of INTUIT with that money thereafter. So all in all, fairly decent. Those were the trades that went well. Now, a few of the trades that I mismanaged. So one of the trades that I mismanaged here, guys, was the number one was Enphase, right? We got these Enphase puts for about 25 cents yesterday. Now, these contracts, I was so obsessed with playing the NVIDIA contracts today and the ELF contracts that I had open, that pretty much I didn't check on Enphase. But these Enphase puts, as a matter of fact, had a gorgeous rally up to about 35 cents. But you can see it was very, very brief, right? For 10 minutes, and then it went back pretty much under my cost. So I did have an opportunity to sell these for pretty much 40, 45 cents if I would have seen it, but I didn't see them, guys. And when I came back to it, unfortunately, they were down. And you can see this arrow right here is exactly where I sold. I sold them for about 14 cents. So instead of taking a gain on these puts, we actually took a loss. So that was one trade that unfortunately I did mismanage. My mistake there. As I said, guys, you win some, you lose some. The most important thing is if you actually can learn from your trades, right? So that was one that I mismanaged. The other one that I mismanaged was the ELF calls that I had. So you guys remember I bought these this ELF 30-day call yesterday right before the close for about, let me see it right here, $5.10. Now, I wasn't expecting to be out of these in one day of trading, but ELF had a massive, massive rally here, guys, today, right? They had a gorgeous rally on the day today, almost up pretty much 20% on the day, right? And within the first hour of trading, I closed the position close to 180. It was about 178, 179. My strike was 185. I really thought that this might be the top, right? Because of how violently it moved up, I was expecting maybe a little bit of a retracement thereafter, something like this, right? And then maybe be able to get to recapture maybe tomorrow or maybe Tuesday. But it just kept moving up here, guys. So I sold this. I paper handed it, sold it too early, $8.80. So we only made about 370 bucks, which is not bad. But the value of these contracts at the close, guys, was like $12. So we could have got $400 more in profit for one day. Another trade that unfortunately I mismanaged. Now, obviously profit is profit, guys, but I just want to explain that as traders, we will most likely never buy the bottoms and most likely never sell the tops, right? So profit is good. So the moral of the story here, guys, is we have to take the wins, take the losses, and move on to the next trade. If you keep thinking too much about a trade that you mismanaged, guys, you'll never be able to move forward. You see how many trades I make on a weekly basis, right? A lot of the times, most of them are wins, but I do have a few losses. The most important part is being able to move on and continue with the strategy that works, because the trades, they'll come, they'll go, but the strategy is what keeps us alive as traders. So that was one that I mismanaged as well. My bad on that one. The rest of pretty much everything was closed. The ELF May 31, 128 puts, we wrote them yesterday for about $1.25. We closed them for 5 cents, so $120 profit there. We have a couple other contracts that are worthless too. The AMDs, we wrote these AMDs earlier on in the week for about 69 cents. They were automatically closed at the market open for about 5 cents, if I'm not mistaken. Let's see if we can find them. Yeah, about 5 cents. We wrote these for about 67, 68 cents earlier on in the week. So another little bit of profit there. All in all, guys, realized profit today was almost about $1,500. I can't be mad, but what happened to the downside here in the end of the tail day of trading, guys? Well, a lot of our positions started going into loss territory. SoFi, right? The puts that we got right around $7 mark. Well, we're now down on them. SoFi below $7. Another one that kind of unraveled here today, guys, was Palantir, right? Palantir with a big negative day. That obviously took a toll on us because our call premium is pretty much out right now, but the stock kept dropping. So our drop on the stock on the day far outpaced the amount that we made on the covered calls. So a nice little drop there. Albemarle as well, coming dangerously close to being assigned right now on Albemarle. They're now below our 123 strike. That had a heck of a dip off from 126 down to 123. So, that premium obviously skyrocketed up during the day, all the way up to $1.30. We were actually making profit today. That one ran against us towards the end of the day. These AMD 150s, those will probably be worthless by tomorrow. And I took another play on AMD today, guys. When AMD was pulling back hard this morning and the market was fairly decent, I went with a trade on AMD. And I went with it here when the stock was coming heavily down, and I saw oversold conditions starting right there. I took the trade here at around 166, 165. I thought, well, there's probably a very slim chance that we close under the lows of the week for AMD. And boy, was I wrong, unfortunately. Still a lot of trading left in tomorrow's session, but we're now below 162.50. So you can see here, guys, I was a bit too soon on them, a little bit too greedy, a little bit too greedy on my strike price here, and we wrote them for 80 cents. I thought that was a good deal with 1 day of trading left, and now you can see they're all the way down to about $3. So now we're, underwater here by about 200 bucks on those. Not that great. Amazon, we could have closed these Amazons yesterday for almost 80% profit. They're now almost break even at this point. So all these contracts were pretty much very good, and then they went very sour for the remainder of the year, for the remainder of the day. So Amazon, we'll see what happens with those. They are flirting pretty much with the 180 level right now. We'll see if we get assigned. I don't mind being assigned to Amazon at 180. Just saying that this is another one that ran against us over the course of the day and really eroded a lot of the profits that we made. We realized a lot of gains, but the runners that we have opened erased half of those gains today. Now, these are unrealized. We're still probably going to make money on these, but just goes to show, guys, had a great start to the morning, and then it unraveled for me as well, right? Giving back a lot of it in terms of unrealized losses. Now, Elf Beauty, this contract expires tomorrow. I highly doubt they hit 123, so we'll be able to make money on this one. And even my Square contract, guys, Square as well has been pretty much nothing but down this week. We got 36 cents, which I deem to be good premium earlier on in the week. Look at how much they're trading at now. 181. So we're down another $150 on this one on Square. Square is under our strike price right now. It is 66.62. We'll see if we get assigned. I wouldn't mind being assigned because we're coming into a big area of support, but that is just the fact of the matter, guys. All of the open positions really ran hard against us into the end of the day. So we started off the day, a lot of realized profits. The account was up pretty much, $1,600, $1,700, and we ended the day with all these positions running against us, right? And even my Canadian banking shares as well coming down another 250 bucks over the course of the day today. So all in all, guys, from maximum profit, could have sold NVIDIA at the top, could have sold Melly at the top, could have made more money on the end phase puts. All of these slight missed opportunities, guys, means that we went from $1,700 profit day to only about $600 running P&L, right? So we realized a lot of the gains, money in our pocket, but the open positions is what cost us at the end of the day. I can't be too mad because my account is up over 1% today. Not very bad at all, right? As a matter of fact, or rather over 1% on the week. But as a matter of fact, the SPY and QQQs are down over the course of the week. So I can't be mad that I'm green when the market is red. It's just unfortunate, guys, right? When these things come back against you when you are in a profit-making position. But once again, guys, as traders, we just have to learn from it and move on and just keep trading. So hopefully you guys appreciated today's video. That's pretty much everything I had for you guys today. If you did appreciate it, consider dropping a like. Would really appreciate it for the algorithm and the growth of the channel. Also, consider subscribing to the channel if you're new. We do these videos every Monday to Friday after the close. And as usual, guys, if you have any questions at all, please leave a question down below in the comments. Anything you want. If it's a question on a stock, technical analysis, an options play that you're considering, anything you want, leave it down below and I'll do my best to get back to you within the first 24 hours. Tomorrow after the close, I will be doing all of the subscriber ticker requests that I've been putting off now for about a week's time. I'm very, very sorry about that, guys. Just been a very hectic time in the market right now, right? In terms of the drawdowns that we had, and then a lot of earnings plays coming in as well. But I do promise that Fridays moving forward is the days that I'll be going over at least 4 or 5 tickers from different subscribers. Please only send me 1 ticker each, just to be fair for everyone. But I promise moving forward now on Fridays, we will take 5 to 10 minutes to do the subscriber requests. And as well, guys, I've rearranged my schedule a little bit and I'll be able to put out these videos a lot sooner. Gonna start filming them pretty much right after the market close, 4:30, 5 p.m. Eastern, and hopefully to have the videos out by at least between 6 and 7 p.m. Eastern. I'll try to do it as early as I can, guys. Really gonna, I rearranged my schedule the most that I could to get these videos out to you a lot quicker because I know your guys' time is valuable and I don't want to keep uploading these super late at night when a lot of people are going to bed. So take care, guys. That was a mouthful. I'll see you tomorrow after the close. Take care and peace.